6-member Monetary Policy Committee, or MPC, headed by the Reserve Bank of India Governor Urjit Patel, has announced the bi-monthly monetary policy, and a 25% rate cut has been announced. That is 25 basis points. Let's get in more details. Joining me right now is our Chief Business Correspondent, Sumit Chaturvedi. Sumit, pretty much on the expected lines, but one could have expected a bolder move.
Absolutely, Sana. 25 BPS or 0.25% was on expected lines, or earlier expected only, but industry was hopeful of 50 BPS, though RBI has gone with a cautious line, cutting interest rates by 0.25%. The overall impact of this is going to be that loans will become cheaper. That depends what kind of the pass on will have from bank side on this. But yes, going by the expectations, RBI, Reserve Bank of India, has gone for 0.25 BPS rate cut on repo rate. Also, Reserve Bank of India has maintained a neutral stance going forward. Well, more important than the rate cut is what tone RBI adopts. Well, this time they've adopted, we can say that, a very neutral stance as far as rate cut is concerned. Going forward, they have to keep in mind what way inflation goes. So based on all that, further interest rates will or won't happen. But as far as this time, RBI has gone for 0.25% rate cut, and repo rate stand at 6%. Now RBI will also have to prod banks, the state-owned and private banks, to pass on this cut to customers like you and me, who can take advantage of that and can borrow more. This will in turn, we can say that, pump in more money into the economy and bring, it has come just before this beginning of festival season that will begin in a month or two. So clearly good news for customers, good news for banks over there, and economy could also, the situation could also improve going forward.
Absolutely. What could be the impact on the market, Sumit, even as, this announcement has come? And also important to mention, for the first time, we saw some dissent in the MPC. Tell us a bit more about that.
Well, as we speak, the markets would be, somehow responding to this. We will come back to that. But markets already have taken into account. Remember, markets are on, we can say that, upward spree from the last many days. The main reason was that only that they had taken into account already that a rate cut was coming. The corporates will lend more, and that money will go into productivity more and more. So markets will clearly cheer this decision, though corporates and markets were hoping for a 50 BPS rate cut. It has come half the way. It has come 25 BPS. This time there was a dissent known in Monetary Policy Committee, which comprises of 6 members. So clearly not all members were on same page, but that was dissent note which has come, which could be, we can say that, a cause of concern going forward. But as the things stand now, the 25, we can say that BPS cut, or 0.25 or a quarter% cut, is something which industry needed most, and it has come as per the expectations.
Right. In fact, Sumit, some of the economists say that 25 basis point cut was rather predictable, but they said it's neither here nor there. Only a 50 basis point cut would make much of a difference. Is that the sense you're getting as well?
Well, industry spoke to a couple of industry leaders who have cheered up this decision, and they have said that they were quite confident 25 BPS is going to be there. On the other hand, they were saying that RBI can go for a more hawkish policy or aggressive policy, and interest rate cut could be more. But RBI, as going by its own nature, has taken a very neutral stand. Remember, inflation hit its lowest level in June at 1.5%. Since then, the expectations were brewing up that a rate cut is almost done, and that's what has come. And inflation was within the range of below 4%. RBI has set a target of below 4% rate cut inflation target, and it came at 1.5% in June. The CPI was 1.5% in June, and since then it was quite clear that a rate cut is in the offing, and that's what has happened today. But going forward, one thing to be watched out for will be in the third quarter, what happens to inflation. If inflation finally, we can say that, goes up, RBI will have to step in and will have to raise interest rates. Well, clearly there is a big combination, or we can say that both inflation and rate cuts are combined. If inflation goes up, then rate cuts will have to come down. But that has happened this time also.
All right, as you mentioned, retail inflation at a 5-year low. Also, growth was in trouble. Perhaps this will boost the sagging private investments as well. Thanks so much, Sumit, for joining us there with a perspective on that breaking development. Now,